Hello, everyone. I'm here today with Greg Johnson, President, CEO, and Chair of Metallic Minerals. We're doing the backstage interview for the Silver Investor Forum. Greg, thanks for your time today to dig a little deeper on metallic minerals.
Well, it's exciting to be back with you. Thanks, Peter.
Thanks, Greg. So why don't we jump right into it? Metallic has a flagship project, is located in Canada's Yukon territory. Maybe you can tell us a little bit about the location, how and why you chose to explore there, and then we can go into a little bit more specifics about the land package and the kind of potential that holds.
Yeah, you bet. The Keno Hill Silver District, which is this historic district discovered, after the turn of the last century, right after the Klondike Gold Rush. It's got this long history of production, high grade, veins. It's one of Canada's only primary silver districts in terms of production. And our neighbor, Alexco, brought the district back into production in the mid-2000s and then recently just turned production back on with two new major discoveries. So really, that's what attracted us to this district is its long history, over 300 million ounces of high-grade production. You've got over 30 productive mines. It's almost hard not to find high-grade silver in this district. It was challenging to put the land package together. It was a situation where we came in and had very patchwork land ownership because of the age of this district. We were dealing with a number of private parties, other juniors, and even some ground because it was a bear market that came open and we were able to stake. But there's 40 different parcels that we sewed together, recognizing that the western part of the district had already produced 300 million ounces down to a depth of only 300 meters from surface, so very shallow. Alexco was demonstrating that those deposits were going deeper, so we saw the potential just on the west of something that could go, double that, 600 million or more ounces. And then with the same geologic setting on the east, but because of a lack of access infrastructure and the patchwork land ownership, it really hadn't had systematic exploration. That was what excited us to come in and snap together and consolidate these land packages. So today it's really Alexco and ourselves, and it's a very inner-fingered land package, over 35 kilometers in length. So it's truly a massive area. It's as big as Greater Toronto area, which is hard to get your head around in terms of the scale of this district. But with that history, with the great work that Alexco and their geologic team have done in the last few years of understanding the controls to these high-grade deposits, it was a great place for us to start putting together this land package during the bear market part of the cycle. And here we are today at what we believe is now the beginnings of a new multi-year commodity bull cycle with a consolidated land package that's just ripe, we believe, for exploration and new discoveries.
So you touched on a few points about why it's an interesting and attractive place to explore and ultimately produce. What else is interesting? Maybe you can touch a little bit on things like infrastructure, and so why that helps.
Yeah, it's infrastructure and the fact that this is a brownfields district. A lot of investors don't fully appreciate, but a classic new discovery in what we would call a greenfields district, so an area that doesn't have existing infrastructure, can take order of magnitude 10 times longer to develop and 10 times more capital to develop because you've got to put in the roads, you've got to put in the power, you've got to permit things. And so the size of the deposit, the economics of the deposit have really got to shoulder a lot to make it. Whereas when you're next door to an operating mine with roads already in place, grid power in place, and a mill there, you have the opportunity to be able to take advantage of that existing infrastructure. You can go from discovery to production much more rapidly, and your capital cost, the cost to build the mine, can be dramatically lower as well. Our neighbor Alexco, in bringing online two new world-class deposits, Birmingham and Flagship, their total capital investment was only $23 million. So that's very low compared to many projects you hear that talk about hundreds of millions or even billions of dollars of capital. And that's very much doable for a company the size of a Metallic Minerals. If we're successful in finding that next 50 to 100 million ounce silver deposit, to be able to envision bringing that into production ourselves, or partnering with our neighbor, or potentially attracting a larger producer into the district, recognizing, hey, this is a potential billion-ounce district on the road in Canada with an existing mine already in place.
Makes sense. I'd like to touch on the fact that just a couple of months back, I think in April, you reported some drilling results on at Formo and Silver Queen. These were actually some very high grade intercepts, certainly exciting. Maybe you can tell us a little bit about the potential and kind of what that means for how you see ultimately what kind of deposit might be there, and size of deposit, structure of I guess maybe the dispersion of the minerals and so on. Maybe you could touch on that.
Yeah, absolutely. So in the two news releases you're referring to, it kind of highlights the two different styles of mineralization we're seeing in the district. On the western side, and this is the Formo target area that you mentioned, we're seeing these classic, extremely high grade veins. They come right to surface. We had numbers of in the 25 to 3,500 gram per ton level over 2.5 to 3.5 meters of width. So selective high grade mining type scenarios on that. And that's classic for the Keno district. In contrast, on the eastern side of the district, our area that we call East Keno, which is this area that shares the common geologic setting with the west, where most of the historic mines have produced in Alexco's current resource and reserve base is. We see that same set of structures, same set of geologic hosts, and we see those same styles in our drilling of high-grade structures up to 1,000 gram per ton plus silver grades. But we're also seeing areas that are tens of meters up to 40, 50 meters in width that are running continuous mineralization. So that holds out the potential in that kind of setting that not only could you have selective high-grade mining, but that you might have potential for open pit or bulk tonnage type mining, which can be much lower cost and can have some really exciting economics involved in it. So it's early days. That initial program in 2020 on the eastern side of the district hit in 26 out of 30 reconnaissance holes. By reconnaissance, I mean these were the first drill holes ever drilled in these targets. These were multi-kilometer long soil, so huge footprint. And they were coincident with multi-kilometer scale geophysical targets. So the kind of things that the big companies of the world go looking for, we have 12 of those targets in the eastern part of the district. We've tested the first one. And so this year we want to do follow-up work on that first area that we hit, see if we can offset those intercepts from last year, start to drill down deeper, drill a long strike and build some tonnage, as well as get the first drill holes in some of those untested multi-kilometer footprint targets in that area as well. And in addition, this will be a multi-drill program. We'll bring in a core rig to continue to drill on those more advanced stage targets where we're starting to build out high-grade tons that could move towards eventual first resource estimates for the project.
Okay, so actually, that's interesting. You talked about some of the drilling that you did last year and this year. Maybe you can give us a bit more detail on what this year's drill program consists of, the budget, the size of the program, and what your goals are with that program.
Yeah, so this year will be our largest exploration program to date at Keno Hill. We're looking at a multi-drill program. We've started out with a reverse circulation drill that we can do for this reconnaissance drilling. We'll be adding a core drill and perhaps a second reverse circulation drill later in the season. So we're looking at an excess of 10,000 meters of drilling. We've already have our crews on site. They were there by the end of May. So we're really starting to kick off activities. That means lots of news to flow, multiple targets to be tested, both these bulk tonnage targets as well as the high grade targets. And we'll be looking to step out and deliver news on growing those advanced target areas, as well as testing and perhaps making some further discoveries on the new targets.
Well, it sounds like potential for an exciting next few months in terms of watching the results as they gradually come out on this year's drill program, and certainly will make it exciting to watch metallic minerals and see how things progress.
Yeah, I'm excited for the outcome this year. In addition, we've got our two smaller projects that will also have active programs. So interspersed with the Keno results that'll be coming out really from now all the way into the fall, we would anticipate results coming from the new La Plata project, as well as some advancements on our alluvial royalty portfolio in the Klondike Gold District. So it should be a very exciting year for investors of metallic minerals in 2021.
Well, thanks for that, Greg. We've certainly, gotten a good overview of the company. If there's any sort of last things that we maybe haven't touched on, you'd like to leave viewers with?
I just make a comment maybe about the kind of current market. I think we've seen a little bit of a short-term setback here in silver and gold, but I think people shouldn't be disheartened. In a way, these kind of pullbacks in the metals, which we see reflected in the underlying value of the equities, the stocks for precious metals, is an opportunity. I think we are at the beginnings of the next major bull market cycle in commodities and gold and silver in particular. And I think this kind of market is a great opportunity to be able to buy things at really attractive values, to pick up things on the pullbacks or the dips, and to build a longer term position in quality names while the market is weak, rather than chasing prices when everybody wants to be in these things. So I'd say it's just a bit of an opportunity here that the market's giving us. And I think that things look very positive for the sector and for the metals. And I think, well-positioned companies with strong management teams able to execute in these kind of environments are going to be well rewarding to their investors and shareholders.
I would have to agree. Certainly the pullback that we've seen in the last sort of week or so is shaping up to be a great opportunity. And it's a chance for people to maybe dip their toe or add to positions that they already hold, and certainly take advantage of it. And I would also agree that things look very positive going forward. And this is a space that everyone needs to have in their portfolio, not just on their radar.
Absolutely. And just one maybe last comment is the seasonality. Historically, yes, we see some weakness May, June, maybe July, and oftentimes we can see some of the strongest markets for our sector in the August, September fall period. So this again is a great time seasonally to be looking at the market as well.
Well, thanks so much for that, Greg. I appreciate your time, and certainly look forward to doing this again soon.
Appreciate it. Thanks a lot for having us, Peter.